Welcome back to the show. It's Capital Market live on Channels Television. And markets in April, what should you be watching out for? Let's remind you that you have the NASD Otoso Securities Exchange first quarter review. That's coming up on Friday, the 27th of April. And Agusto should be closing the market. Agusto and Company, a major research organization in the Nigerian financial market space, will be closing the gong on Wednesday. That's next week, 4th of April 2018. MPC meeting is built to hold on Tuesday and Wednesday, 3rd, the 4th of April. And the very first quarter one Capital Markets Committee meeting will be holding sometimes in April as well, because April is right under our nose right now. Those are some of the events that you should watch out for on our show, Capital Markets, as well as our sister program, Business Morning, 10 a.m. to 11 a.m. Mondays to Fridays. Well, in part one of the program, we focused on market performance for the first quarter of the year. Now that the second quarter is right under our nose, let's hear some predictions from our guest, Shina Olubu, who is the head of research team at GDL Asset Management Company. Well, Shino, thanks first for standing by. Before we went on break, briefly concludes your statement on bonds and treasury bills as we saw them, transpire in the first quarter of the year.
So that was what I was going to say is that we actually knew that we're going to see moderation in the yield this year, because the Minister of Finance did mention towards the end of last year that there was going to be a change in strategy in terms of how deficit was going to be funded, that we're going to use external borrowings to even restructure, to refinance the existing. So we knew. So it's not surprising to see moderation in yield from as high as 21% to, as I speak to you now, is around 14%.
So is there anything that will be changing in the second quarter of the year? Because I know the timetable for bond auctions for this year was actually released earlier in the year or late last year. I want to believe that you're privileged to all of that. What will be changing in terms of bonds and treasury bills?
Well, I do not see any major change as we go on, particularly because this year is a year of is penultimate to general elections, so majority of the things we're going to see. So we're going to see. So I do not see anything major.
Besides, crude oil price is still likely to hover around $70 per barrel.
$7 per barrel. So
OPEC is likely to keep cutting the production.
So I just see that we're going to have something that is a similitude of what we saw what we have seen hitherto in the
But just in case the budget is passed, won't we need to borrow more?
Well, budget is going to be passed eventually.
In the second quarter, do you foresee that?
But like I told, in the second quarter, yes. I mentioned, I think, was it here or on Business Morning some months ago, I was asked that did I believe in the optimism that the budget was going to be passed in the early days of the year in January, and I told Boston, I remember that there was no way that at best the budget would be passed by the end of first quarter. We're at the end of first quarter. So the last thing I heard from National Assembly was that they were going to pass the budget in, was it 24th of April or something?
Hopefully.
If you discount that, she's talking about May at best.
Okay, so we're also, next week, this is so close to us right now. CBN MPC meeting, we have missed the one for January, we missed the one for March. The very first one we'll be holding soon because the National Assembly also made it look like that. What are your expectations from there?
For MPC, for me, I do not see there is no argument for the rate to be raised. I think I think that there are two options. It's either the rate is dropped or the rate is maintained. Now there are several arguments for the rate to be dropped. One, we still have a very fragile growth. Our growth that is less than 1% is not what we desire at all. So, and for you to bring about higher growth, you need to reflate the economy by dropping the rate. That's the first thing. The second thing, another argument for drop in rate is the fact that unemployment rate is still very high. Unemployment is around 18%, and underemployment is around 21%. If you add the two of them together, about 40%. Misery, if you add the inflation rate, misery index is over the board, is crying out there. So these are some of the argument for, and then for drop in rates. Another argument for drop in rate is if before now you were particular about price stability. There has been reduction in inflation from as high as 18%, as we speak to you, to about 14.33%. We've seen massive improvement in terms of management of the FX. We've seen phenomenal stability in FX. So these are some of the reasons for the high rates that we had. So if we have had some improvement in terms of price stability, is it not time for us to be looking at growth? And if you're looking at growth, then one thing you should be talking about is how to drop rate. However, another argument for holding rate will be one. We are seeing normalization of rates across the globe. You know, we've been seeing monetary easing either too, but economists are saying that they want to go back to what it used to be. So in which case we're going to be seeing increase in the rates across the region. And if we have increase in rates across the region, it means that markets have been either too not too attractive or begin to be attractive. So the kind of FPI I have been seeing coming into the economy we will not see. So we might need to keep our rates attractive in order to keep. That's the second thing is that you need liquidity in the E&I window. And if you're going to maintain the liquidity in the E&I window, you need...
This is the export and import window for foreign exchange.
So, and what you need to fuel that is the inflow you get from the API. And if you want, you must get the API, then you need to keep your rate attractive. So
let's take a bet. Okay, I'm listening.
So the last thing I want to say, still on holding the rate, is that this is a year of election.
Absolutely.
So the year of election, you see massive spending on normal. So we expect that
because inflation.
So we expect the environment to be awash with liquidity.
Remember, we don't have so much time, but let's then move on. CMC meeting, the very first one under the Zubair-led SEC. What are you looking out for?
Well, I do not. The few things that I expect from as takeaway from or as fallout of that meeting is whether or not what they want to do as per this
demutualization. Demutualization
of the NSE. I expect to hear things about whether or not they still want to move the e-dividend registration,
because they haven't also reached an agreement on the price.
So they have to do that. So I expect that. Then the last thing I think also is there's some pending issues as far as some issuers are concerned, particularly the Oando issue. I expect that to be.
I think we have just less than a minute to go, but let's look at MTN IPO. It's built to also happen in the second quarter of the year, I think June or thereabouts. What do you hope to see? I understand that's a $16 billion deal.
Let me hold the value is bringing in terms of Naira and Kobo or constant. Let me just look at what is going to bring to the market in terms of the positive vibe is likely to bring. MTN coming to the market is going to make a big announcement to some issuers that we thought should have been in the market that are not in the market. So the coming of MTN could actually begin to make some other players that we expect to be in the market, the telecoms, to start looking at the market, and we might see them coming to the market. So I think it's a good thing.
We never have enough time on this program, but we will have more time when the week opens on Business Morning, our sister show. Thanks a great deal, Shina Olubu, for making it down to Capital Market.
Thanks for having me.
Shina Olubu is the head of research team at GDL, that is Growth and Development Asset Management. On that note, we draw the curtain on Capital Markets. I'm Temple Ashaju. Thanks for watching. I'll see you next time.